Evening, it's Brian Peruginian, Senior Trader and Co-Founder of ProfessionalStockTraderLive.com, bringing you the technical analysis update for Monday, March 9th. Again, another down day on Wall Street. I don't think it should surprise anybody. Well, maybe it should because we're actually looking for a stock market to rally, but nonetheless, we closed down 80 points, closing at 65.47. What's weighing on the market today? Could it have been Warren Buffett on CNBC talking about the economy falling off a cliff? Who knows? It looks like they look for any reason to sell. But one thing I can tell you is you saw the big snapback Friday. Wait until you get a catalyst to turn this market higher. That's what you're going to see. You're going to see such a snapback and such a rally with vengeance that you've never seen before. Every bear market has them. I expect the same thing to happen here. You've got such negative sentiment on all the market vein sentiment indicators. It is the worst it's been since 1929 to 1932. That's right, you heard me right. They're as bad as they were, if not worse than them. We don't even have readings that go back to 1929 to 1932. So as far as I'm concerned, these surveys, they are at record lows for any bear market, and you can cut this negative sentiment with a knife, eat it with a fork, as I continue to say. You're now hearing the Wall Street Journal talking about 5,000 on the Dow. You're hearing Kramer talking about 4,800 to 5,000 on the Dow. They're all trying to apply certain S&P earnings and apply a PE to them. Who knows where it's going to bottom, but I'll tell you what, I like the action in oil. You can see oil was closed up today over $1.60. It's trading up another 18 cents here in the aftermarket. It hit a high of 48.80. You can see here gold is down, or actually up 3.80 in aftermarket activity, but gold traded down, was down over $20 an ounce today. I think gold is heading lower. I think oil is heading higher. I think the stock market is heading higher. The McClellan oscillator is telling us that there should be a sharp rally coming here. We're continuing to see higher lows on the McClellan. You can see here the Dow is sitting down below this 20 line. It's for over 2 weeks now, 3 weeks. It's absolutely unheard of. It's crazy below this 20 line. We've never seen this type of action before without getting any subsequent sharp rally. We are on the lookout for a rally. Just look at this here. The Nasdaq's been up 2 days since February 12th. It's absolutely crazy. Washington, you need to come up with a cure for the banks. That's the first thing that you need to do. Do anything, whatever it takes to fix the banks. This market will absolutely rock and roll. Again, within the context, I think we're going to get this big rally, but we're going to then have some pullback activity. It's only natural. You're not going to go straight up off the bottom. You're going to have to back and fill. You're going to have to put a base in. That's going to have to be, anywhere between 3 and 6 months, and you're going to have a gradual improvement in the averages. But I don't think you can expect anything other than that. We're not going to be seeing, $10,000 this year or $9,000. I think it's going to take time to work out. Every bull market, tops out. It doesn't top out, just in a week or a month. You have to form some type of a topping formation, just like you have to do down at the bottom. You have to form some type of a bottoming formation. So let's not get caught up and think we're going to run away to the upside. But you folks here at ProfessionalStockTraderLive.com, we're making money on our swing trades, on our day trades, so we're just fine here. The one thing I want to talk about, I do think gold is on the precipice of breaking down below its 50-day moving average. Let's go ahead and pull a chart up on that there, and we can take a look at this. We talked about gold rallying to its downtrend line. We got the rally. Now we've got the decline back here. We can see on the McClellan oscillator, it came up off the 20, below 20, unlike gold. Unlike the S&Ps and the Dow, you can see we rallied up and through it. Now I think it's going to get ready to roll back over. And if we take a look here on this next chart I'm going to pull up, you can look at the 50-day moving average coming in right in this 902, actually 903.50 up in here. I think we're going to break below this here in the coming days and weeks. And I think you can Katie bar the door on gold then. And it's interesting that despite China talking about some positive economic data coming out here, for the February report coming up this week, the China's industry chief warns of severe conditions still existing there, and he actually used the D word, not depression, but deflation, that there may be some signs of deflation in China. So I like hearing that. I think that's going to send gold for another reel to the downside. And I think, it doesn't matter what they come out with on that report. I think deflation is a problem going forward. I don't think inflation is not, maybe 3 to 5 years out you might be looking at inflationary problems, but I think in the short term over the next year and a half, deflation is what's going to happen. And I'm looking for a significant break in gold. Having said that, let's take a look at just 2 trading ideas that we have going into tomorrow. Caterpillar being one of them. You can see here Caterpillar is getting ready to break, and it actually has broken here the last couple of days. A downtrend line going back to January. Let's zoom in on, or zoom onto this just a little bit so you can look at this a little better. You can see here it's broken as downtrend line. I like the fact that, you know, it's broken and it closed up on the day 69 cents with the stock market down. I think the stock is positioning itself to move higher in the coming sessions. And also, if you take a look at the stochastics here as well, you know, it is just barely above its 20 line. It's done the same thing as the Dow, just hovered down below it for, you know, 3 weeks. And I think the stock is going to continue to move itself higher if given the opportunity. Again, I would look to be a buyer of this into all back off. Of course, it has to have the right setup on the charts based on the 10 minutes, as we've talked about on our daily live webcast. The other stock I like is HES, Hess Corp, above the 66.5 area, which it traded to 66.80 and then reversed. I think the stock will move to the upside. This is oil related. You can see here it's not been making lower lows as the Dow has. It's got a nice little pattern in here. I'd be looking to be a buyer of this into all back-offs. Again, make sure the stock's acting well. Same with Caterpillar when the market's on the defensive, you know, into declines early in the day. Make sure these stocks are acting fairly well and they're not pressing lows from the prior day. Also, the stock here is on a buy signal, nor being close to overbought. I think the stock can be bought and be put on your long side radar. Again, let's be on the lookout for a significant rally here in the coming days and weeks in the stock market, potentially being ignited because Congress is potentially going to pull back and eliminate the mark-to-market. I think that'd be great. I think the bank stocks could absolutely explode off that. And one stock we are going to potentially be looking to get long as a swing trade is General Electric. I think this stock has put a bottom in. I like some of the I like the tape action for starters, but I like some of the things I've been hearing surrounding the company. I think the stock can probably be looked at being bought here into any weakness and being bought for a swing trade setup. Again, GE, I would look to be a buyer on into weakness. But we will definitely let you know when we are stepping in on this here, if at all we do. But again, let's kind of look on for a stock market rally. Let's look for oil to continue to, you know, be firm in here. It can do some backing and filling because it is a little extended right now, oil. But net, we're looking for oil to continue moving higher. We're looking for gold to continue moving lower. And speaking about that, let's just do one thing real quick here before we wrap this up, because I don't want this to get too long. We talked about how gold and oil move in tandem, and you can see here the blue line is the USO, which signifies oil, and you can see the black line here being gold. You can see how they pretty much move in tandem to the upside, and then you can see oil took a big dive, gold took a dive here as well, but then rallied back up. So now you can start seeing here as we zoom in on this here, we're starting to get a convergence here. I think we're going to continue to see oil rallying. I think we're going to continue seeing gold drop, and we're going to get a convergence somewhere in this area, and I think we're going to see things get back to more normalized where you're going to have gold and oil moving in tandem. So I think we're going to get this convergence, continued convergence, where gold's going to drop, oil is going to rally. Have yourselves a great evening. Those of you that join us in the morning, we'll see you again around 8:20. Thanks for tuning in. Have a great night.